And welcome to Daily Market Mastery episode number 2 with me, Christian Rauchenwald. Today we continue where we left off yesterday, and that is applying Elliott Wave Theory on the Standard & Poor's 500 using Motive Wave. I will share my screen in a second. I'll just quickly share the stream on eToro to give others the chance to join as well. $1 SPX. Join live at, and there's the link. That should be the right link. Oh no, it's the wrong link. That's the get shareable link. That should be that one. Yeah. Let's check if that works. So if the link works, accept all. Does it take me to the right stream? Yes, here we are. Okay, cool. I hope you all have a great day. So as I said, just gonna post that and actually also gonna quickly bother Twitter with that. So sorry for the delay. Had a dentist appointment in between, so didn't have the time to, okay, there I'm logged in the wrong account, so discard, and so yeah, just a second, and then we can get started. In the meantime, like I'm curious, like probably some of you already noticed that GameStop shared their earnings yesterday, and that as a result, the stock last I checked was up like almost 50% in basically aftermarket already, so 40 something in aftermarket and now 50 in pre-market. Like what do you think about that? Feel free to share it in the chat. Okay, now I'm logged in, so, and here we need a hashtag since it's Twitter. So Daily Market Mastery, yep. And yep. And Elliott Wave Theory should probably also get a hashtag. So yeah, social media mastery on the other hand, yeah. Cool. Tweet that and share that there, which means it should be on my profile on eToro, which by the way, you can find a link to my eToro portfolio / profile in the video description down below if you're curious about like how I'm doing there. And yeah, now before we get started, or last thing before we get started, I'm quickly gonna check if the tweet worked. Yep, looks nice. Cool. And muting my phone so we don't have any distractions there, and quickly satisfying my OCD by making sure that all the damn lights in the computer are synchronized and not different colors. And with that, we're pretty much good to go. We have some wire management, and yeah, that's it. So as you know, Daily Market Mastery is about me applying Elliott Wave Theory. So to different assets, ideally to the ones that I'm trading or consider trading, and hopefully to help me master Elliott Wave Theory. I would say I'm not that bad at it, but I'm definitely not a master yet, but also to help you understand it. And hopefully if some of you are already better at it than I am, then to have you basically provide feedback, but also to give you an insight into how I'm managing my portfolio. So that's what the stream is about. Now, yesterday's stream went on for an hour and basically included an introduction into Elliott Wave Theory. So if you haven't heard anything about Elliott Wave Theory yet, maybe start by watching yesterday's streams or jump there after today's stream. Like both works just fine, so that you are actually like familiar with the basics. Now, as I said, yesterday's stream lasted an hour. However, in the long run, I will try to keep those streams to roughly 30 minutes plus introduction, which means I'm actually going to use my phone to start a stopwatch timer. I would consider setting an alarm, but my alarm sound is basically causing heart attacks to people that actually are sensitive to loud noises. So we're going to go with a stopwatch, and I check it from time to time to roughly finish around the 30-minute mark, which also means that we probably will not be able to finish the labeling of the Standard & Poor's 500, so the SPX in that case, simply because, there will not be enough time to dig into everything. However, we will make progress, or hopefully make progress, on what we started yesterday. Now, with that, I'm going to press start on that, and I'm going to enjoy a sip of my afternoon coffee, and which also gives people a little bit more time to tune in if they want to or not. So I don't know, like I didn't drink coffee for a couple of years, but I'm back to that habit to have one in the morning and then usually one in the afternoon. And it's just, I don't know, so pleasant. How about you guys? Like any coffee drinkers out there or not? So are you more on the T side or, yeah, anyway. So as I said, by the way, if you are new to the whole Elliott Wave Theory stuff, you can read that book for free online. There's a link in the description down below that takes you to where you can create a free account on Elliott Wave International to actually just read the book for free. And if you like it as much as I do, you might end up just ordering the physical copy as well. Plus, there's another link that gets you to this A4 cheat sheet, which currently is blurry because of the NVIDIA broadcast filter. Just going to perform a magic mouse click to switch the webcam. And yeah, there you can see the cheat sheet. So that basically is super useful when you then actually are applying Elliott Wave Theory after understanding it by pretty much reading the book. Yeah. And yeah, so with that out of the way, let's actually share my screen. You can see motive wave. Yesterday in the stream, I also, as said, yesterday was an introduction to Elliott Wave Theory. So I also covered other software solutions. Motive wave is, in my opinion, the best one for Elliott Wave Theory, although it comes with a price tag of $89 to $100 something per month, depending on what level of Elliott Wave Theory features you want to have integrated. Whereas there are other alternatives out there that are free or cheaper. Yeah. So, but motive wave is just a charm because it has something, yeah, like it automatically points out errors. So if I do this, it automatically tells me that that's not a valid Elliott wave pattern because of that violation, and that violation. Yeah. So, which is really, really neat. Now, to quickly recap what we have, so we were looking at, starting from the monthly chart, we were looking at wave 1 here, which, however, and for that I actually need to bring back TradingView, blah, 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 and the chart on TradingView, go here, and there should also be another chart flying around somewhere here, that one, or not chart, but just to merge those things real quick. Yeah, so if we look at TradingView, we can see a history starting at the dinosaurs, more or less, yeah, so in 18 something, which is really, really relevant because it means that if we label that out, that labeling here, it was done yesterday for test purposes and is not accurate, or most likely not accurate. But overall, we can say that this is a wave 1, which means that we're currently in a very big, or in a wave 2 of a very big degree. And in motive wave, we're currently only looking at this part here. So that is what we labeled as 1, 2, 3, 4, 5, which is actually this wave 4. And we, as a result, also in a second wave of a smaller degree. But it's important to understand that we are in the second wave of a very big degree, because it means the correction that we are to expect, again, that is just random here, yeah, so don't get set up on wherever that is positioned right now. But the correction that we're expecting here has to be far, far bigger overall, yeah. Yeah, so that brings us back here. So again, like, while there's history for like more than 100 years, we are only looking at it from 2000, where are we now? Yeah, like, I need the cursor, blah, blah, blah. We don't have a cursor right now. There, so that's March 2009. So in the bottom left, it mentions, yeah, so... yeah, as mentioned, so if you're just tuning in the first time, then you might not know that, but I just set up the streaming setup like basically a week or 2 ago, and like the whole trading setup is not fully done yet. The whole streaming setup is not fully done yet, so might be a rocky experience for the first couple of streams or weeks, depending on how much time I have on the side to improve things, yeah. Now, so we labeled out that part, and as a result, we came to the conclusion, okay, that this here is wave 1. And as a second result, we're currently in wave 2. Now, if we either read the book, I might actually go there then and look up the pages and so on. Or if we, and again, switching cameras to show you guys what I'm doing, blah, 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 desk cam, I need to put that on the stream deck. So if we look on our cheat sheet, I know I will set up the Zoom for that to make it better for you guys as well. But for now, you just have to basically get your own copy from the link in the description and then print it for yourself. But so if we look on our cheat sheet, then we said, okay, from 19 kill me till the high last year, we basically have our first 1, 2, 3, 4, 5, which means we are on a bigger scale, just finished this wave 1 and are now in this wave 2. And as a result, even on our current scale, where we only look from 2009, we also finished the 1, 2, 3, 4, 5. which means that 1, 2, 3, 4, 5 becomes wave 1 of a bigger degree, which means we're in wave 2. And the cheat sheet tells us that wave 2 can be any corrective pattern, not a triangle. So that's what the cheat sheet says here. Again, you cannot read it, but I'm going to hold it closer, so just once, yeah, or twice. So if you look closely, you see any corrective pattern, not a triangle. And additionally, if we look at the table, we can see W2 for wave 2 has a 42% chance to turn out as a zigzag, 8% as a double zigzag, 1% as a triple zigzag, 40% as a flat, and a 10% chance as a double free. Now, the beauty of that is if we look at the corrective patterns, that basically it means that, so we have 42% chance for zigzag and 40% for flat. So there's an 82% chance that it will turn out like this or this pattern, which both look the same, just subdivide differently and have different conditions in terms of wavelength, but they both will be labeled A, B, C, which helps us, which helps us actually a lot. I mean, we still have to figure out which one, but it means like in 8 out of 10 cases in the second wave, we're looking at this or this, which leaves then only 20% of cases, or actually less, because we have like the 8% where we are looking at a double zigzag, which technically is again 2 double zigzags or 3 corrective patterns in a row. And it's labeled WXY. Technically, if we zoom out big enough, we might still label it as ABC. It's wrong, but you know, like from the perspective. So those 3 would already cover 90% of our cases. And then we only have a small chance. What was the last probability that we had for wave 2? 10% for a double free, and a double free would be here, which also is labeled like a double zigzag, but overall we have a high chance that that is what we're looking at. And only, which means we're going to focus on trying to identify it as this. And if we cannot identify it as this, then is the point where we then look at the alternative. Yeah, because it doesn't make much sense to waste our time by looking for the whatever, like 8% likely or the 1% likely triple zigzag. Yeah. Especially because a triple zigzag would need time to form or develop. So back to the screen share we go. And hi, Mr. Flo, great to see you here. How are you doing? Like, do you already have a date set for your moving, or is it, like still in the, I don't know, in the air? There's a saying, a proverb for that. I don't remember what it was. Yeah. Anyway, so. And yesterday, so we under the assumption that we can label this, so that wave 2 here as an ABC, either, that's not adding up right now, as an ABC, either corrective pattern, either a zigzag or a flat. We already labeled this like this. Now, if it were a zigzag, which is the one with the highest probability, with, what did we say? We said 42%. Then basically it means, and that's also on the cheat sheet. So again, like educational purposes here. So Deskcam. So on the cheat sheet, we can see that in a zigzag the first wave divides into an IM or LD, which stands for impulse. You can see here IM, or leading diagonal. You can see here LD. Again, I will set up the Zoom for that whole desk capture thing during the next couple of days, so that that whole sharing of the cheat sheet and the book becomes a little bit easier. Yeah. Now, which means if we can fit, following the rules, a leading diagonal in this wave A, it would be a decent indicator that we are on track, that this is indeed only wave A of a corrective ABC pattern. It could still at some point then turn out into a double zigzag or triple zigzag or triple free. Triple zigzag was the option here, yeah, or triple free was the option here. Doesn't really matter. So it could still turn in one of the later or lower percentage possibilities. But overall, it would already tell us what's supposedly going to happen next. Yeah. So, and with that here actually is what we did yesterday, and that is a leading diagonal that fulfills all the rules. We didn't check the guidelines. For that, we would have to consult the book. We'll deal with the guidelines once we have labeled out more. Now, if we assume that this is indeed so if we assume that this is wave A now, because we were able to confirm at least that we fit a leading diagonal in there, which we could now, if we switch from a monthly time frame to a daily time frame, or probably even lower, and then move those points so that they actually match the proper candles. And then we could go and confirm that as well by looking up, again, switching back real quick to the desk cam, what a leading diagonal consists of, yeah? So, which might help us to confirm if this is indeed a leading diagonal or not. Because, yeah, so to cover some ground here, but hopefully not make it too complicated, so screen share. So as said, in that zigzag pattern, we would need to have an impulse wave or a leading diagonal in here. It cannot be an impulse wave because one core rule of an impulse wave is that this wave 4 does not retrace into the area of wave 1. So it shouldn't have gone higher than this, but it did, yeah? So it cannot be an impulse. However, a leading diagonal allows for that to happen, and there are specific conditions for that and so on, which at least fulfills that requirement. But when we then go further and say, okay, now if this is a leading diagonal, and now it gets interesting, then that first wave here has to be another impulse wave, which on first glance I would actually say it is, and I can, that should be the hotkey for it, and use the auto labeling, and it should actually be able to fit another impulse in there, and it does. So I mean, I might have to zoom in a little bit more. Yeah, sorry, zooming is a little bit challenging sometimes. So here we are, and we basically, yeah, it's not using the right high points right now, but other than that, we're golden. Or it might use them, I might just not see it, yeah. But basically 1, 2, then we have the longest wave 3, then we have a wave 4, which ends here, but might also end here, so we would need to confirm that as well, and wave 5. So that first rule, okay, there it doesn't, because then it would retrace into the area of wave 1. Now it put it here, okay. Now, just because the price moved higher doesn't mean that the wave actually ends there. There is a special word for that I currently forgot, yeah. But basically, it's not always the highest or the lowest point that ends the wave, yeah. So for now, we can actually label an impulse wave in here, so we meet the requirement that in a leading diagonal, the first wave is an impulse or a leading diagonal. We can also, as said, so since we there, I don't know the shortcut, or there's no shortcut. Since that price movement moves higher, it's also possible that that is actually a leading diagonal, and that wave 4 would end here, yeah, which would also be perfectly fine, or it would end here. So again, for that, we would need to confirm further, blah, blah, blah. I'm going to try to align the wave 5 point here properly. That's a little bit of an issue when you're jumping through time frames, that it then sometimes, yeah, is a little bit challenged with keeping really the right high spot, yeah, or candle selected, yeah. So we can assume at least, so we can label this as an impulse, and we can label this as a leading diagonal. So at least our wave 1 for another leading diagonal. So saying that this, not this, but that this is a leading diagonal would be confirmed because we can fit that in there. Now, wave 2 in a leading diagonal would be any corrective pattern, but not a triangle, yeah? And for that, we can just use the auto labeling for corrective patterns, and it will throw ABC in there, or it will not. Yep, it will. So it labels this as ABC. Now I'm gonna take this as okay. Again, we would have to now look even closer and confirm what corrective pattern that could be, and if it actually is made up of the right components. But since the, now what was it, the leading diagonal wave 2 can be any corrective pattern but not a triangle, that pretty much for now fits the bill. So that part would also be, no, I just wanna, yep. That part would also be confirmed so far, which brings us to our wave 3, where things get a little bit tricky because we're in a regular impulse wave, so in the one where wave 4 does not retrace higher than or into the area of wave 1, that would always be an impulse. It always has to subdivide into an impulse, whereas, and that's the tricky part here, in a leading diagonal, that also is another corrective pattern that is not allowed to be a triangle. Now, I have for sure no problem to get an ABC labeling there, but I probably 1, 2, 3, 4, 5 could also, if I wanted to, I mean, it will not do that because we already have other labels there, or maybe it will still do that. Yeah, so as you can see, if I get rid of the, yeah, let's get rid of that. And then if I get rid of that, then technically I could also label that like this. And that's a little bit yeah, not a huge sign for concern yet, but it would also be, if we just look at this area here, ignoring all the rest, we could label it valid as an impulse, and it's not supposed to be an impulse here. So it might turn out that, again, zooming out here for the monthly chart and moving forward and zooming in, so it might turn out that our assumption that this here is A, B, C turns out wrong, because, and that we would have to, in quotes, adjust, relabel, because that part here might not fit the quota. Now, blah, blah, blah. Oh, I'm actually an idiot. Sorry, I was looking at the wrong screen, or the wrong sheet. Not wrong sheet, but at the wrong area. Yeah, we're actually golden because, yeah, that's the annoying part with live streams. Your mistakes are broadcasted to the world, yeah. But yeah, so actually was looking at the wrong. I'm gonna share that with you guys so that you see where I got it wrong. So I simply was, from my perspective, looking at, let's try to hold it, looking at this, which is obviously wave 2, when in fact leading diagonal also subdivides into an impulse wave, yeah. Sorry for that mistake, but circling back, so screen share, circling back, and which means we're actually golden because, as I said, we can easily label that as an impulse wave. And again, we would have to look closer and confirm that impulse as well, but I'm fairly happy with labeling that as an impulse wave more than I am with actually labeling it as a correction, which then brings us to wave 4. And if you're wondering why I made that mistake, it's actually one of the common ones, because we're currently labeling downwards, and usually we're looking at an upwards overall direction, and so my brain just didn't switch fast enough, yeah. Anyway, so which means wave 3 here in that leading diagonal would also check out. Wave 4 can be any corrective pattern. Yeah, I mean, motive wave will have no problem fitting a corrective pattern in there. If we can confirm it or not is a different question, which we would have to look closer. But at least this one has not the feeling of being an impulse wave, because we lack a strong third wave, or if that would be the third wave, we lack a fifth wave, yeah. So far so good. And then wave 5 would always again be either an impulse or an ending diagonal. Yeah? Now, if we move those points so that they're properly aligned, and there's an A that also needs to be properly aligned, so which means we have to either fit that in here, yeah, which checks out actually, so we don't have a retracement into the area of wave 1. So it looks like, at least for now, the going back to monthly, we are able to confirm wave A and can now check how wave B so far developed and what we can confirm there. Now, that brings me to something very, very important. So while we are currently looking to confirm a very specific pattern here, it's possible that other patterns also apply here. So I'm just going with, I don't know, like experience, gut feeling, and what I think is most likely to check what I'm looking first for. Now, if, for example, trying to confirm that leading diagonal would have turned out impossible, then I would have jumped to, okay, what else could it be? And looked for the next option. If here with wave AB, or with basically this wave B here, we are having trouble confirming it, well, then I would also look for what else could it be. But right now it seems that we are actually on track here. Yeah? And yeah, that line we can delete, and that line would basically, yeah. So since we were saying the most likely scenario is that this is a zigzag based on statistics, so with, what did we say, 42% chance that this turns out to be a zigzag, we can also already determine that for most zigzag, wave A and C are gonna turn out pretty much identical, which means if wave B were to go, where does wave B go? Here, yeah. Then wave C would go like here, which means we would still have room up to almost 4,500 before we then crash down to around 3,000, yeah. Now, in the bigger scope of things, and for that I have to, yeah, like actually also scale it a little, so, and zoom out. In the bigger scope of things, that probably will not be enough of a correction. Well, here, where we only look from 2009, it might, where was the button for auto scaling? Yeah. So we're here where we look from 2009, it might be sufficient of a correction because we get into the area of wave 4 of an impulse wave of a previous impulse of a lower degree. However, looking at the lifetime, we would basically be talking to only drop down till here. Yeah, so like 3,100, which definitely doesn't qualify as the wave 2 that we need. Yeah, which actually brings up an important issue. So as we covered yesterday, and I'm going to quickly repeat, so each wave of its own consists of waves of smaller degree and is part of waves of bigger degree. Yeah, and so what we see here, if this would be 0, 1, then that wave 1 would subdivide into an impulse or a leading diagonals, which means in that wave 1 we fit 1, 2, 3, 4, 5. And then that wave, again, we could break down and look this one to break this down. Ideally, if that labeling is correct, again, that was yesterday just thrown on the chart for illustrative purposes, which, by the way, reminds me, should have said that earlier, but you know, like everything that I say in this stream/video is my personal opinion, not financial advice. You should always do your own research, consult certified professionals, draw your own conclusion, and make your own decisions, because I'm obviously just sharing my thoughts, yeah? But yeah, so that wave would also subdivide, and this wave would subdivide, and that wave would subdivide, yeah? Which means, because right now it looks like our ABC would turn out like this, which is way too small, which means we might not yet even have wave A developed, but we are actually looking at, and can I zoom in here as well like this? Yeah. So while we are right now saying, okay, this might be ABC, it might be, but it might also, for example, if it were a flat correction, in a flat correction, wave A subdivides into another corrective pattern. So which means the ABC that we are currently labeling could potentially be only wave A of a bigger ABC, yeah? So I know it gets a little bit at that point. So yeah, just gonna undo a few things here. Yeah, so, and we circle back to, where did we have it? Motive wave here, yeah? So, but it is something that we have to keep in mind actively. So it doesn't invalidate what we're doing. It just means that between that and that here, so like where we have our point C, or let's actually say it like this, that point 2 here might not be here. It might be somewhere completely different. And we are now only labeling out a small part of something that then makes up the structure that gets us to here, or like, again, that's now just me moving it randomly. We can also use another tool real quick. So that would be wavebasis.com. Yeah, they offer like a free trial, and after that, if you don't pay, you basically can still use manual stuff, but with certain limits. So but yeah, here we also have the SPX, and we are looking at, just to confirm, we have here January 1st. And for that, we would need the, there we have 1 month. 1 month seems reasonable. Well, that's like 1 month time frame, okay. 6 months. So there's January 1st. No, what, like there's something doesn't check out. So January 1st. Okay, so probably because here I'm looking at monthly, and obviously, okay, so we're gonna go bigger. We go all, that might blow it up a little bit, yeah. But basically, we are looking at this part here right now, and our assumption is that, and that I can manually label here, is that this here is wave 0, and I have to enable the magnet so it makes more fun. And so this here would be 0, 1. And then if I, yeah, so, I'll stop that. And then here I can say lock all smart tools, which actually would tell us, okay, from this starting point, the expectation would be, okay, we'll actually have a correction till down here. Now, however, since we're looking at all, if I actually get rid of that one, Wave basis is, by the way, not always 100% correct with the predicted price area, but it's a super nice tool to use, yeah. If we, however, say, okay, can I put it in here? So I'm going to put it in here for now, that this here is our wave 1. Again, on TradingView, we have data another 50 years more. So, but just to give you an idea, that we can already see that the predicted corrective pattern would actually take us much further, yeah. Now, if we then go ahead and say, okay, we have a corrective pattern here, which we are saying right now, okay, this might be A, and I'm just going to throw B here and C here, and then drag the chart a little bit, and lock, unlock, and yeah, then just wave B, and also lock, unlock that, and then wave C target would be here, which is right now very similar with what we actually have. So we have the assumption here, it says 4,100 to 4,380. Our labeling would suggest, okay, we might go to 4,500. And then we have the, yeah, like C now moved a lot because I moved it around. But we have the assumption if that's ABC, that those would be identical, which means we would end up at 3,164 roughly. And here we get roughly that same ballpark area, which means our labeling, yeah, like is possibly or is likely correct. Yeah, but it just might not be of the right degree because, again, it might just turn out because we don't get down into that area that we would need to see if we start early enough. So which means it's possible, I'm just going to throw that here, that that whole ABC is only wave A, B, C of a flat corrective pattern. Yeah, so in which case, so again, lock, unlock, and we put that in here. So if the price were to go here and then lock, unlock, and you can see then suddenly it would add up. Not perfectly, so we're not in the center of that area, but the predicted retracement would then suddenly add up, which means it's, yeah, like I'm relatively confident that our labeling is actually correct, but that we're missing a degree in between, yeah? So basically this would be, here we actually have it, yeah, like, no, here we don't have it mentioned, yeah? But so this would be the lowest degree that we currently are labeling, and then that would be 1 degree higher, and that would be 2 degrees, not that one, but the pink one would be 2 degrees higher, yeah? And it seems like we're currently missing at least 1 degree in between. Could turn out that we're missing 2, so that ABC in return also would only be wave A, B, C. Now, if we check that, yeah, so might even be more likely that we are missing 2 degrees in between, yeah, as you can see. And that is under the assumption that those both turn out as like regular corrective patterns, which have an 80% probability. So either that the entire orange thing here, can I lock the wavelines? Yeah. So that the entire orange thing here is a zigzag or a flat correction, which would mean if it were to turn out like this, yeah, and if we then consider again that if it were a zigzag, that wave A and wave, why are they extended? Yeah, anyway, that wave A and wave C are relatively identical, that we would have a pattern like this. Now, in terms of time frame, that obviously would be a long time. Why can I not delete that one? Oh, it's annoying. Delete, yeah. And because obviously it would mean that overall we're on a downwards trajectory till 2027. Then we have a short recovery, and then we would have more. Yeah, like obviously time frames are not that exact and so on. There's a separate chapter in the book about it that I have yet to master. But overall, if wave A looks like wave B and it turns out like this, then that's what we're looking at. And it means that we would currently be missing this pattern because we don't have enough information developed yet to actually label it. And then for that wave A, we are missing this pattern. And for wave A here, we could start to label it. So we would then assume that every candle here is actually making up either an impulse or a leading diagonal, if it's a zigzag, or any corrective pattern, which is going to be hard to be very conclusive since we don't have enough candles developed here. And we are basically, as said, missing 2 degrees. Yeah, but other than that, still works out fine so far. Yeah. Now we had a 30-minute mark, and yeah, I wish I would have covered more today, to be honest. but I'm going to call it a day. I think it's been a lot of information for people that just started with Elliott Wave Theory. Again, if you really just started, then you can check out yesterday's streams where I cover more basics, check the free book online, definitely download the one-page cheat sheet. It's not some affiliate link or something. It's a link to a PDF that gets you exactly that nice little one page that has all the rules and all the rules and conditions summarized for all the wave patterns. So definitely do that. As for today, I would conclude that for now we have confirmed that at least this wave A leg checks out. And I actually wanted to get further, but can't always get as far as we want. So tomorrow's stream, which is already scheduled, so you can already enable notifications for it. And don't forget, like, subscribe, and enable general notifications. In tomorrow, we'll then look at basically this first wave A to try to confirm it, which will then help us to basically further confirm that this indeed is turning into an ABC pattern, which would mean that I should currently close my short positions that are betting against the SPX and wait until we get up here and then short again from there. Or it turns out that tomorrow we are unable, no matter what we do, to confirm this part here, in which case we would have to go back to the drawing board and see what else we can fit in here that follows the rules and requirements. So anyway, that's it for today. I hope you were able to take something away from it. And hopefully see you tomorrow. And that's it. So till next time.